You are listening to the Ready PDM Network.
This episode is brought to you by Under 10 Consulting. For many organizations, it seems products get released by individual heroics. Yet most organizations need a small number of living documents, fewer than 10, to manage their products and services. Contact Under 10 for a product playbook designed specifically for your organization.
Are you ready? Well, don't you know?
That's the sound of the men working on the chain gang. That's the sound of the men working on the chain gang. All day long they're saying,
But I think the more interesting one is the blockchain underneath, which is basically the distributed ledger.
This is Alfred. Alfred is going to take care of a group of people performing a colour experiment. His role is to tell each individual the favourite colour of the person to their left. The blockchain is a decentralised network that does not need intermediary. Similarly, our group of people, a blockchain does not need Alfred. Sorry, Alfred, you're fired.
So that in the analogy I use for capital markets where there's a counterparty, sometimes it's a trustworthy counterparty that you already know, and sometimes it's an unknown participant. They have to be vetted somehow, right? So that's the rules I think we need to figure out. It's one of the ones that we're looking at first because it's a little bit lower risk than actual currency.
Yeah, exactly.
But it's not to say we wouldn't have a service that converts points to actual real money. I don't think anyone could stand up and say, it's here today and it's ready for prime time or anything like that.
Digital disruption explodes the status quo, rewrites economics, scrambles supply chains, and blurs category boundaries. It also pushes a business into new dimensions while questioning its very survival. Every industry faces disruption.
All those regulators have some stake in this, but what usually happens is they explore and they meet and they discuss and they get input, and then over the years they start to implement regulations around this or standards or ways that people are allowed to do business using technology like this.
I can see it's dangerous for you, but if the government trusts me, maybe you could.
And I think it's the same with the blockchain infrastructure. I think it's a good analogy. I think it may become like the super highway of ledgers, right? So,
Are you ready?
Hello, Ready Product Radio heads, and welcome to another exciting episode of Ready Product Radio. For the next two episodes, we're going to be covering blockchain technology. Being ready involves staying on top of industry trends in technology, and blockchain is just cresting the top of the hype cycle, so I thought it would be good for us to invest a couple of shows in this important technology. This week, we talked to my longtime friend Duke Butler, currently head of enterprise architecture strategy for the Royal Bank of Canada, about Blockchain 101. What is blockchain? Why do we need it? And what problems can it solve? Ready Product Principle number 15 is, never bring a knife to a gunfight. Stay current. In technology, there are two types of product people, the quick and the dead. Enjoy the show. Duke Butler, welcome to Ready Product Radio. I've really been looking forward to this conversation for a while. I know it's been tough with schedules and whatnot. You and I go way back, Toronto Product Management Association, etc. But for our listeners, maybe we can start with you giving an introduction of yourself and, what you can tell us about your day job. Don't give away any secrets, obviously, but, give us an introduction, please.
Absolutely. So you're right, Alan. You and I have known each other for quite a long time, and I've been a contributor to the Toronto Product Management Association on several presentations, going back at least probably 10 years. Hard to believe. But so I basically started as an entrepreneur with a company called Magellan and had gone to Waterloo, University of Waterloo, came out, and the technology we were focused on was risk based. And a lot of that technology ended up being instrumental in my career as I went into the banking industry. So especially companies like American Express, even at Microsoft, where I was, in charge of banking applications and some of the emerging technologies around e-commerce.
Right.
And then finally in the banks itself. So here at RBC, I've been 5 years in capital markets. So, the trading platforms and the strategy around technology and risk. And then this job, which is the head of enterprise architecture strategy, which is a group of about 50 in the bank and looking after everything from cloud analytics to things like big data. And of course, the topic we have today, blockchain, is one of the architectures that we're exploring right now.
Nice. Well, that's good. So Duke, the Ready Product radio show is really all about helping people on their product journeys from whatever discipline be better ready for their challenges. So yeah, as you said, our topic today is around blockchain, Bitcoin, seeing a lot of activities and a lot of products coming out in that area. So thought it'd be really good to tap your knowledge in that area. So what I usually do, Duke, is I usually have 3 topic areas. I find that's about the right length for a podcast episode. So I thought with regard to, blockchain technology, we'd kind of build a foundation. So let's start with the background would be the first topic, right? What is blockchain, and briefly, what's the history of it? I get the sense myself as a real novice in this field that it has something to do with Bitcoin, or Bitcoin has something to do with it. So maybe we'll cover that first, lay a foundation, and then second, go on and talk about maybe what I call blockchain 101, which is, okay, why does the world need something called a blockchain? What types of problems do they solve? Why would I be interested in one? And then third, and in this aspect, please don't give away any secret sauce, but can you talk generally about in what you're seeing in the market, the types of products and services that blockchains are enabling? And then also on that side, as product people, we always want to understand where something is in the life cycle. So if in that third piece, we could also talk about, is blockchain mature technology? Is it bleeding edge? Should I wait a couple of years? Do those 3 topics sound good?
Yeah, that sounds great. Thanks, Alan.
Awesome. Good. So Duke, let's get started with the first one. So can you talk a bit about, from your perspective, what a blockchain is and give some historical perspective? Like, where have these things come from? Did they just drop out of the sky one day, or?
Yeah, in one sense, it kind of did drop out of the sky. I mean, it's for some people, it's bleeding edge, but other people have been familiar with this technology for a number of years. I think most people have heard about Bitcoin, and Bitcoin kind of led the way on some of the thinking on cryptocurrencies. And, do we really need to pursue the paper money kind of concept, or do we look at digital currencies, right? And I think a lot of the European banks have decided that, at some point we're going to be a cashless society, and other banks are still, jury is out. RBC is probably one of those banks. So, I mean, there's some skepticism, I guess, on digital currencies.
So there's some bulls and some bears, basically. Okay.
Yeah. So, I mean, the concept of a digital currency is, no different than a regular currency. It's just that there's no physical asset, right? So some of the stored value is in a digital format that's encrypted, and that you could exchange with, like we would exchange money for goods and services. Okay. Right. So I think, well, of course, the missing one that RBC would question is the trust factor, right? So do you trust that something that's being offered in a startup kind of environment with a cryptocurrency like Bitcoin, is that something that we should trust? Is it a secure transaction? Is it going to lead to fraud and some money laundering? These kinds of things that we're always out looking for. So I think the underlying technology, blockchain, is what enabled that exchange of value, and it's got some legs. So there's probably quite a few people that tell you that Bitcoin's here to stay, and so it came out of the gate and it kind of went up to I think it was $1,100 or $1,200 per Bitcoin, and encrypting the actual stored value is actually not an easy process. So it does take time to do that. And it takes compute power, which, again, is something that everybody has to be aware of. It's not just a magical currency. It's something that actually takes effort to create. But for those people that bought it at $90, maybe they made some money, right? So, I think now the hype curve, it's kind of reached the peak, and some people are skeptical, and it's kind of going down. What realistically is going to happen with Bitcoin. But I think the more interesting one is the blockchain underneath, which is basically the distributed ledger.
Okay.
So most people will know in banking that we do transactions. We provide the trust factor to make sure that those settle properly, whether you're selling a security in the market or you're simply selling something to on an e-commerce site. We provide the third party kind of assurance that yes, this transaction's taken place and that it's settled and that people will get paid. And that's the end of it, right?
Yeah.
With Bitcoin and especially blockchain, I think that's changing gears a bit. And I think blockchain is what's exciting everyone, not so much the Bitcoin cryptocurrency. The reason is because there's a chance that we could eliminate a lot of the kind of manual processing that takes place. Sometimes it takes 2 or 3 days to settle a transaction. Most people that sell a mutual fund will probably find it takes, even a week before you get your money, these kind of things, right? So that's a lot of time in this, fast market. My kids want to get paid right away or they want the goods right away when they pay for it, right? So online. So, I think the blockchain allows you to do that. And it basically takes the transaction and it blocks it up into blocks. That's why it's called blockchain, right? And then it's kind of distributed not just into RBC kind of back office. It's distributed across a number of computing locations. So it could be hundreds or thousands of people that are actually owning pieces of the transaction. But there's a trust factor because obviously it's encrypted and people share, in the value chain they share some piece of this, right? So, but it could enable immediate transactions that previously wouldn't be contemplated, right?
Okay.
So that kind of led to the banks getting interested, not necessarily because they want to start to do this right away, but because in time, maybe startups like we call fintechs, right, will start to do this and disintermediate banking, right? So why do you need RBC to settle this transaction when you can do it with an exchange of value using blockchain out in the market, right?
Exactly.
So, these are the things that they're thinking of. How realistic is that? Some things that might be very realistic, like Bitcoin, you could already do it with blockchain. Other things like capital markets, maybe it's a little harder, right? So, there's a lot of regulatory kind of steps that you have to worry about: origination, syndication, distribution, these kind of things, right? And some of those steps we could probably do faster in technology, but the regulators might not let us do that, right? So, so those ones may not take off quite as fast.
Yeah, so let me kind of go back and unpack a little bit of what you said, make sure I understood it there. So if we go back to like my grade school education, I don't know if you had this, but for example, I think it was in maybe grade 3 or 4, we'd have the class whereby we'd have some shells or something, and they'd start to introduce us to this idea, okay, the big shell is worth more than the little shells, or one big shell is worth 3 little shells. What I heard you saying there is basically this is no different than that. It's a group of parties agreeing upon establishing a value for something. In this case, it just happens to be a virtual something, as opposed to a piece of paper that you carry around in your wallet, or a printed bond that you keep at home. So that's one thing I heard you say. The other thing that I heard you say was that the Bitcoin, well, it came out and got a lot of the initial traction. Maybe what you're saying is, in terms of overall business impact, it's really the blockchain concept that underlies that really probably has more legs and more broader applicability. Is that fair?
Yeah, that's a good way to put it. I think. Okay. I think that's accurate. I think all the banks, when they started to look at Bitcoin, were thinking, is this something that's going to stick? Is this something we should be concerned about? Is this a market that we could participate in? Should we create our own cryptocurrency? I think the answer was no, not right now. But I think the other alternative too is, how do we do payments? How do we make them frictionless? That part really excited them. So the blockchain piece of the equation seemed to fit, and there's still a lot of experimentation. To be honest, I don't think anyone could stand up and say, it's here today, and it's ready for prime time or anything like that. What's the rules of a transaction when you use a blockchain kind of value chain? So I think that all that needs to be figured out. But yeah, I think the blockchain technology underneath the covers is like the secret sauce of this whole thing.
Okay.
And anyone that works in a bank and sees the complexity of how the settlement systems work, how some process is very manual and it needs to be digital. Like, everyone's kind of agreed on that concept, meaning like a process that someone might have to do with several people entering information to different systems and taking physical paper and moving it around. Those kind of things are slowly going to go away over the next, say, like 5 to 10 years. Some banks are ahead and others are behind. But at the end of the day, I think this is a technology that would help the back end, you know, in terms of settling the transactions, making sure that things are secure, making sure things are frictionless and digital, you know, so that's the value there, I think. Again, like, you know, which line of business would you choose first? You know, is it payments? Is it trading? You know, those things I think are open to debate. And yes, we're doing some experimentation in each of these groups. Some of the ones that I think, well, I'm sure we'll talk a little later on, but
let's stay on the basics here just for a little bit longer, Duke. So if we go back to Bitcoin, so did blockchains exist before Bitcoin was created, or was Bitcoin created and then the market said, hey, you know, this thing that was used to create Bitcoins, which maybe was called after the fact blockchain,
I think
is a really neat idea. Is that kind of the sequence?
Yeah, my understanding is when blockchain was created, it was a bit of a stealth kind of operation, right?
Okay.
So, and the same guy or person that created Bitcoin also created blockchain.
Oh, okay.
Now people have iterated on it, I'm sure, you know, but the concept was there. Like I don't think they were thinking the value was in the currency, in the underlying technology. They thought it was in the currency, of course, right? Like if you're going to create a cryptocurrency, that's where the value is. But it was funny because they had to have a way to actually, enable the transaction securely. So that's why that was created. And the concept, I mean, it seems for people that are in computing to make a lot of sense. I mean, distributed kind of compute power, leveraging the internet, you know, making sure it's secure and people have the, you know, the private and public key to make sure that every transaction is trustworthy. All that stuff makes sense. I mean, if you're going to create a market for this kind of Bitcoin currency. So on the other hand, banks are still a little uncomfortable with that concept because they don't want to be out of the equation either, right? So they want to be part of the equation. So that means like they either have to keep their old way of doing things and have a parallel way to do it in the new world, which I think is what they're going to do. Or they have to just say, you know what, we're not going to participate in this market and hope that it doesn't take off, right?
So, it doesn't leave them behind. So I just want to layer this because there might be some folks listening that are new to this. So an analogy that comes to mind, and correct, tell me if you think this is apropos, is if we look at, for example, in North American history, let's say there's a gold rush in the West, people, have to lay down, let's say, railway tracks because there's just so many people trying to get west that we need a more efficient reason to get west. So they're going after that gold, and let's call that the Bitcoin. But then maybe you realize, hey, wait a second. We've created this railway system from east to west. We can use that to transport goods. We can use that to transport people for vacation. And the long-term implications or value add of the railroad becomes way much higher than, making a few folks rich. Is that a fair analogy? Bitcoin being the goal, the reason for creating the blockchain, but then the blockchain being actually the infrastructure, then being of much more value to society, if you will. Was that a fair, or am I stretching that? Okay.
No, I think you're bang on. I think if you talk to most people about blockchain, they're excited. I mean, we're at the some would argue, like Gartner, I believe, says that the hype curve is over. We're trying to get real about the whole thing. But on the other hand, Bitcoin itself, I don't think that's as exciting as blockchain. So I think that's the, I'm sure both of us remember when the internet kind of became vogue around, the late 90s, early 2000s. And we called it the information superhighway, right? And that's the same concept. Like, how can we exchange information and how can we share? And that seemed really radical back then. And look at it now, right? So it's like a given, right? You come to work, you're online with several people at a time. Sometimes you're doing conferencing, you're doing emails, you're doing texts and all this kind of stuff. And I think it's the same with the blockchain infrastructure. I think it's a good analogy. I think it may become like the super highway of ledgers, right? So, and I guess one of the examples I could use is when I was in capital markets, I actually mapped right from front office to back office how the trades settle. How you take a trade like a bond or an equity when you're exchanging, like say with Deutsche Bank or a third party, and which we call counterparties. There's a whole value chain you've got to follow, and there's a lot of things like risk, credit risk, and making sure that the counterparty pays up when they have to, and these kind of coupon rates on bonds, this kind of thing. And a lot of that stuff is very complex, but I think it's more complex than most people think it is, and it's unnecessarily complex in some cases for no good reason.
Right.
And I think it's ripe for disintermediation and disruption. I mean, if you're an entrepreneur out there like I used to be, I would think, how can people possibly do it this way? It just seems like ridiculous. Well, the reason is because right now it's profitable and, it's not that painful, right? So, they're not that concerned about that, very complex kind of sub-ledgers and how all that feeds to the general ledger and making sure things settle and everything's copacetic and secure. But very quickly, I think in the next 5 years, you'll discover that if someone can do this and they don't need to be, following that complex web of settlements, I think it'll become too powerful to ignore.
Yeah.
Right? And so now we need to prove, does it work?
Yeah.
Is it secure? Is it cheap enough that we can do it fast and quickly? Then I think it'll happen.
Okay. So just one more question on the Bitcoin thing, and then we'll get past it. So,
Sure.
So I remember in the early days hearing about, people sitting at home in their basements with very powerful computers doing Bitcoin mining.
Right.
Can you explain to me what that was all about? Was it about that you basically create the value of the coin by, like you say, running through this computational thing?
Yeah, I think probably what was happening there is a lot of people were experimenting with holes in the system. Like maybe we could create a Bitcoin ourselves without having to, to go out and have a third party do that. Create money. It's almost like counterfeiting a dollar bill or something like that.
I was gonna ask
a bit
that.
of it. Yeah.
Yeah.
Part of it would be legal because there's no maybe rules around doing this because Bitcoin is not regulated. So why would you blame someone for trying to do it? But if very quickly when this becomes a real currency, of course they're going to regulate it just like every other currency.
Right.
And there'll be rules around transactions and so forth. But I think the mining idea, I think it was a bit like the gold rush, or internets when that took off. Or any other technology. I think it's a bit of a, let's find all the holes in this thing and figure if we can make money fast at it, right? Some of it's just pure hype, right? And the reality after time is, it's got to be regulated, it's got to be secure, all these kind of things that the bank provides, like a trust kind of factor.
Yep.
And that's where I think the value of a banking partner comes in and still will come in. Yeah, in more and more cases, I don't think you could have just the Wild West of mining bitcoins or creating your own version of Bitcoin in the basement kind of thing for very long. But
exactly. Because I imagine like the real cash supply. We go back to the gold standard and all that stuff. But let's say I allow somebody to pay me with a Bitcoin at a point where, let's say, a Bitcoin is worth 500 Canadian dollars. Well, then if some super geek in his basement can generate a couple thousand more units, then the value of each of those Bitcoins that I got paid with decreases. So I've just lost money. Is that kind of the?
It's the same concept of supply and demand. So if you don't constrain the supply, I mean everyone could create their own, then the value goes down quite rapidly. It's no different than when a recession hits and people start printing money. Now the government can do that and get away with it, but most people can't, right? So you'll quickly find those people will either get arrested or they'll go out of business, fast enough. If we make it secure, right?
Okay. Okay, good. So I think that's good coverage on the first topic, Duke. Thanks for that. That's the background. So I think you've already answered some of the blockchain 101 questions I had, which is, first question is why do we need blockchains? I'll try to reiterate what I heard you say. Basically, we can look at technology right from the beginning as basically removing effort, cost, friction is often the term, and basically allowing us to do more with less. And what I heard you saying is a blockchain is a way that in a number of different market scenarios can remove that friction. Right. And you mentioned time being one of them, reducing settlement time, maybe increasing security, less physical handling of things. We know that anytime a physical person has to, move a piece of paper from one side of the desk to the other, that costs money, right? Sure. Any other reasons besides those that the world needs blockchains, or are those the main drivers?
Yeah, I think it's Yeah, I think that the world needs blockchain or something like that in the long run, mainly because the manual processing in the existing legacy, if you want to call it that, or systems of systems.
I always
of
like the term heritage myself.
Heritage
sounds more respectful than legacy.
RBC doesn't like the term legacy, but let's call it systems of record, right? So we have to store transaction information. It's not optimal right now, and I think that's why most people get into the technology business, is to improve really bad process and really bad kind of unnecessary steps and costly process. So I think that's why I see this, whether it's blockchain or another kind of technology, to enable much faster turnarounds and transactions, real-time processing. It's the same as the data world, right? Because most of this is pure data that we're talking about, like the transaction data, the counterparty data, the risk data. It's all data, right? So we're getting better and better at managing that in the big data world and the analytics around that and how we could leverage that. So we need systems that actually speed up the processing and make it a little bit more real time versus batch and overnight and this kind of thing.
Yeah. And so that's the problems that's why we need blockchains. So the second part of the question is the types of problems. And I know you and I have spent the bulk of our careers somehow related to banking. It's nature of the beast here in Toronto where we're based. But let me test this. When I was at a Product Hunt Toronto meeting a couple of weeks ago, which was based on fintech, there was a lot of talk about these blockchains, and some of the discussion I got in the breakout groups was really a blockchain can be any type of marketplace, if you will, where people want to get together to do anything. It doesn't have to be financial. One guy was talking about doing this as a civil contribution, civic behavior, for example, in terms of basically negotiating with your neighbors to say, hey, I'll put in 2 hours this weekend to help build this park if you'll put in 2 hours, and then we can go to the city and say, listen, we've got all these people. Am I right there that well, we're talking mainly about financials? That the blockchain could also be used for building trust and having collaboration in other domains as well? Yep.
The ones that come to mind, like healthcare, is one for sure. Like there's a lot of data involved in healthcare, right? In people's historical medical records, things like the cost of doing business, and paying for drugs and paying for treatment, this kind of thing. So I think that there's a lot of contractual information that goes in with that industry, and I think that blockchain could be a very good enabler of that. Another one is retail, right? And not just the online retail, but even the regular retail world. They're keeping track of products, keeping track of supply chains. This is all stuff that you would typically have in a ledger anyway. So it's or some sort of database to record the transactions and keep track of all the different contracts and service level agreements, this kind of thing. So I could see that being an enabler of a faster and better way to do that. Other industries, I think pretty much any industry, like airline industry. Look at the data that we're using there. And how people fly, where they sit, and this kind of thing. But also business travel is another one, hotels and some of the stuff with Uber, Airbnb, these kind of companies. How do we make it faster, better, cheaper? I mean, that's their value proposition, right? And disrupting some of the traditional ways to do it, which are inefficient. Right? So,
So let's take one and maybe use an example, and maybe let's take one that's not, maybe not financial. So you and I have a common experience, for example, with the Toronto Product Management Association. So let's maybe use that as an example. So if we looked at a not-for-profit organization like the Toronto Product Management Association, it's a group of people that are coming together. There is the notion of contracts on multiple levels. A not-for-profit organization like that requires sponsorship because there are costs, and it's not generating profits. It requires volunteers to help run the organization. It requires, call them speakers or talent to come and speak with the organization. So that is a community, if you will, where it only holds together and we obviously don't use these types of terms, but it is really held together by contracts. And I know when I was organizing it, for example, I would reach out to you and I'd say, Duke, can you be our speaker next month? And that was very important because, if we made that agreement, that contract, and then something came up next month, then you've got a bunch of people coming to the meeting, expecting a good presentation, and maybe we don't have one. So could we use that as an example? Like could that model be applied to like a blockchain, or are they, because you said you're chunking up a transaction. So let's say we're in February now. So let's say we're talking about a meeting in March. Could we say that, okay, there's this thing called a March TPMA meeting, and you're a participant in that blockchain, if you will, in that value chain, because you're going to present. I'm a participant because I'm helping organize. Other participants are volunteers. Other participants, like Pragmatic, are sponsors. Am I swerving into the ditch here? Or?
No, I mean, it's a good concept. I think you could, the scale is maybe small.
Exactly.
Yeah. So
I'm deliberately trying to.
Absolutely. To simplify it, it would make a lot of sense because you could originate a transaction, on your home computer, and you could share that transaction on the internet, which we already kind of do. But you could use, the technology in blockchain to do it. Absolutely. Because everyone's going to participate in the market, of course, and have access to the right information, which moves where the actual, the real time kind of transaction or the, exchange is going on, right? Okay. So whether it's booking me or paying for the, the service, and I'm just kidding because it's nonprofit, but right. You know what I mean? So, but you could conceptually do that too, right? Keep track of all the just different participants in the marketplace, keep a solid and trustworthy record of that, and have it shared across a number of parts in the ecosystem, right? So, and use the compute power out there instead of using just one computer. This concept works well, I think, for a nonprofit like that.
So using that simplistic example, and I wanted to use a simple one, what are some of the key elements? If somebody was at home listening to this podcast and wanted to draw out on their whiteboard, and I say that because a lot of product people do have whiteboards at home. You mentioned that there's a blockchain that participants, quote unquote, own blocks within that. There's transactions, there's ledgers. What are the building blocks?
There's two ways. There's two ways I could think of it. One would be, you're actually creating your own. You know what I mean? Like, so you're creating, let's say, the Toronto Product Management Association blockchain, right? So, and you're creating it from scratch, right? So this would require some software development, and this would require some encryption and some security kind of work, so to create your version of the blockchain. What's probably more likely though is, like, for example, Microsoft has their version of blockchain, right? So on Azure. So, this, just like we go and provision, a cloud service, this could be blockchain service that you white label and allow, TPMA and any other nonprofit to participate. And there's obviously some secure guarantees around that, and making sure that it's, it's enabled by Azure and distributed across their networks, right? So, or their cloud data centers. So that's one way I think it's most likely to happen, especially for smaller businesses. Whereas when you get to the scale of RBC, are they going to want Microsoft to run that? Maybe not, right? That's still up for debate. Like, some people believe it should be privately held and very, guarded and physically and, digitally. Other people are starting to believe, like, we could participate. It's just as secure to put it in an Azure or an AWS, right? So I think those participants, in the big technology kind of companies will have services around this, right? And I think that's where there's a market opportunity for them, and that's why they're also piloting a lot of these kind of services now. So let's poke a little deeper then. So let's say we've gone let's just to keep the analogy simple, let's say, TPMA small scale. Let's say we're using a product like Microsoft Azure. So what are the things we have to deal with? One is we have to identify who the trusted participants on the blockchain are. Is that one of the first, no,
drive me through a sequence. Let's say in addition to being our speaker next month, you were actually helping us implement this blockchain. What sequence would we go through? What are the questions that we'd have to ask, and in what order? Sure.
I mean, these are all rules that I'm speculating on because they don't exist, right? I mean, there's no blockchain.
It's early days.
There's no blockchain regulatory handbook. But what I think is going to happen is some people in the value chain don't want to be known, right? So it's anonymous.
Okay.
But those rules still need to be fleshed out. Like, do we want people to be known, entities, or do we just trust the network that we set up, right? And the rules around getting into the network, so that in the analogy I use for capital markets, where there's a counterparty, sometimes it's a trustworthy counterparty that you already know, and sometimes it's an unknown participant. They have to be vetted somehow, right? So that's the rules that I think we need to figure out. Right now, they don't. If I was to forecast where I think it's all going to go is like, you'll go in and you'll provision a service for blockchain, right? And it could be Azure blockchain, it could be like Oracle blockchain,
Amazon,
whatever. Amazon, and the bigger ones will have all this figured out, right? So they'll have ways that you could either let people into the blockchain ecosystem that you've created or not, based on a number of rules. And some of those rules are in the banking world will be regulated, and other, like in the nonprofit, maybe not so much. And so you'll have to create your own standards and policies and rules. That's what I would do first. Like, who's allowed to be in this marketplace? What are the rules of engagement? How do we onboard someone as a counterparty, let's say, or a participant in the market? What role do they play? Are they going to be simply using, the technology that we've created as a repository of their information? Are they going to, provide a piece of the chain, like, origination or middle office, or some sort of risk, guarantee or security service, or what are they doing in the market in the first place? And then things like settlement and things that, even third-party services that you could provision, right, through APIs, for example. This is the market idea that we've got here at RBC, is that there'll be some sort of API layer, and you'll be able to interoperate with all sorts of different parties based on the rules that you create, and based on the technology that you've opened up to them to use.
Okay. So continue with the analogy there. Let's say once we get it set up, then you mentioned being part of the chain. So is there the notion that you're really only part of the chain if you're actually contributing some value? Is that inherent, or can you have I'd call them passive parties that aren't really adding any value in that chain?
I think for low value parts of a blockchain, I think, like, let's say something that's not likely to be tampered with, or that you're not like for example, exchanging points. Maybe you create your own points for TPMS.
Yeah, exactly.
And you want to create some sort of value exchange, but it's pretty low value and it's low risk.
Yeah.
You might not care that much about how many people are enabling that to happen, and as long as they're secure and that there's certain minimum requirements met that way. Others, like very high value kind of exchanges, like let's say you're doing a $10 billion bond offering, and you typically would do that only through trustworthy means, like a clearinghouse or a third party that vets through it and guarantees a risk, like a Moody's or a an S&P kind of credit risk rating agency. Those ones would not be the same kind of rules of engagement, of course, right?
So we end up with a parallel to what we have today with the notion of like an asset class, and different levels of security and policy depending on the value and risk associated with that asset class. That's a good way to put it. If that's safe to say, okay. And then you mentioned earlier about a transaction. So how do transactions fit within the blockchain? Is it again the ledger example where I have a ledger and then I can gain assets, in which case I put it in the asset column. I can maybe I there's a theft, or I sell an asset and then I have to do that. Is that?
Yeah, I think those kind of things conceptually.
Simple, but
I don't see that concept changing too much. Like, depending again on the use case, like the use cases for healthcare, probably a lot different, right? I mean, most important is the confidentiality of the patient information and some of the medical history, making sure that that's accurate and all that kind of stuff. But a lot of that stuff is already done today. It's just maybe not done as efficiently as it could be. So I think those kind of steps in the process will stay the same, but be more secure and a lot of times faster, and less prone to error. Those are the things I think that'll happen. And then back in banking, I think, there'll still be a place for banking to be a trusted partner in the value chain, because otherwise, who's guaranteeing the transaction? That's the same thing we're solving today as a bank, right? Lending money, having people put their money in the bank, and we use that to fund other things like loans and so on. These are the things that banks do and will continue to do. And it's hard to imagine that they won't be part of this blockchain world unless, unless we're missing something, and that's why we're experimenting a bit, right? So, yeah, sure, there could be new marketplaces, new non-banking entities that create transactions that are, as trustworthy or more trustworthy than the bank, and then people will grow to say, okay, fine. A little bit like driverless cars, right? It's a good concept, but you want someone driving you around, on the highway, and until someone else tests it out, you probably don't want to be doing that, right? So once it becomes kind of, that's secure, it's probably safer than when you drive yourself, then I think then you'll adopt it, right? Much more easily and quickly.
So before we move off the blockchain 101, then Duke, what if we've got listeners that are interested and want to learn more about blockchain? Like what are some good public sources that you've seen? Because, as you say, the part of the challenge when something's on that hype curve is everybody's talking about it, but that makes it sometimes even harder to find, really credible information, shall we say. Right. So can you throw out a couple kind of public sources that you're aware of that would help people understand blockchain if they wanted to dig in a little more? Yeah,
some of the usual suspects are good sources like Gartner. It's an IT research company. Forrester, these companies all have their point of view. A lot of them are very, the same sort of, this is a very hype-centric kind of thing right now, like any new technology. Eventually, the hype is kind of at the peak, and then it kind of goes into the reality of, can this actually be deployed and adopted, or just does it disappear? Yeah. So Gartner, Forrester, the usual research analysts. The strategy companies have their point of view. McKinsey, Bain, I like to watch and see what they're up to. And then there's industry associations like, Canadian Payments Association is an example, right? Because they have a vested interest in how we're going to enable payments using blockchain. Yep. If you work for a bank, there's innovation labs going on and testing this stuff out. So those are good sources. They have people on staff now that they've hired. Most banks have like a digital head, right, or some sort of advisor. This is a trend that we're seeing, and they talk about blockchain. They publish papers, they blog about it. So those are all good places to look. Yeah. Finextra, some of the financial industry websites. Even the bank like RBC has information they publish, and most of the competing banks would have stuff as well. Like Barclays has, is doing some stuff, and most people have heard of R3, which is a startup company that is around the blockchain ecosystem, and out of New York, and they've managed to get most of the big banks to participate in experimentation and discussions and rules and policies around blockchain. We're a participant. RBC is, and BMO is, and so is TD. Those are the Canadian ones I know of. And all of these banks are doing some sort of work with R3 on, how can we make this work as a payment technology, or, is this something we even want to be working or not? But we're betting that it probably is, so we should participate, at least find out what's going to happen, right?
So one way, and this can help us transition into the third area here. So one way that we understand, you mentioned earlier that back in the days when we were all on the internet superhighway or information superhighway, one way that we can see maturity is standards start to emerge. So, for example, with the web, the W3C came along.
That's right.
And standardized. Let's just ask that question before we move on to the third topic. Is there any equivalent to a W3C standards body starting to emerge for blockchain, or are we way too early for that?
No, I don't think we're too early. I think it will emerge very quickly. In the banking world, it already has the the regulators that regulate each location. Like, for example, in Canada, right, they have a regulator here, OSFI, Ontario Securities Financial Institutions. So OSFI regulates pretty much everything in our world here, and then in US, SEC, and UK has their own regulator, and so on and so on. all those regulators have some stake in this, you know, but what usually happens is they explore and they meet and they discuss and they get input. And then over the years, they start to implement regulations around this or standards or ways that people are allowed to do business using technology like this. I think it's not just blockchain, though. I think it's pretty much any new technology that's, kind of changing the way that we do business a lot will be examined for sure. Yeah.
There's always this notion. There's always this notion of could a technology like this be used to create a whether you call it a dark net, a gray market, but basically say, listen, the law-abiding folks will use banks and will use money and currency, and then these other less law-abiding folks need some system.
Sure.
So would they use the system? And obviously that's where everybody wants to watch it because we don't want to live with two parallel civilizations here, right? One good, one bad, so to speak.
Right.
Yeah, good. So let's transition, Duke. I want to respect your time to the third area, and it's fine if we focus on financial services because that's mostly what you and I have in our background. So what types of new products and services are you seeing around blockchain? And I know we're just experimenting. Or is it more the products and services aren't going to change? It's going to be how we deliver them is going to be much more efficient. Costs will be reduced. Maybe that'll lead to lower prices for consumers. Maybe it'll lead to higher profits for providers. What are you seeing? I know it's early days, but whole new product categories, or is this just about taking cost and time out of existing scenarios?
No, I think there's whole new product categories going to be created from this, and assuming that it actually gets adopted and people use it. Some of the ways I'm talking about new products would be maybe ambiguous a little bit because, for example, trading platforms, right?
Don't talk about anything, by the way.
I mean, there's nothing secret here at all.
Okay,
I mean, everybody probably knows that when we trade securities and so forth, that there's a lot of manual process. There's a lot of front office kind of people that are, and there's also some automated process like risk systems and so on to make sure that things are done securely and that you don't bet the bank on silly things. And it does occasionally happen, but there's internal risks, checks and balances for all this kind of stuff. But there's ways where you could imagine that stuff that we do today that the bank participates in, like a bond offering or something where you typically need a third party to guarantee that the coupon rate is paid out or whatever the contract is settles properly and that the rules are respected. Those things could change. They could at some point decide that we don't really need that. Because there's a secure, less onerous way to do it out there that has been proven and people have adopted and. To the extent where people are willing to take it on and not go down the path the other way it was before. And those are startup opportunities. I think most of the people out there doing startups around blockchain are looking at all these different things. Like what's the, where it's like anything, where's the value store, and if there's banks that are adding value now, then we can do it better, cheaper, faster, all those kind of good things. Why wouldn't we try to do that, right? So those products, I think, will be coming, and some of them will succeed. Like we'll offer a service for clearing securities or for guaranteeing collateral or whatever it might be, right? What was done in-house or what was done by a third party not so well, like a credit rating agency could be a good example. During the financial crisis, they didn't seem to do as good a job as we'd hoped, right? You probably remember The Big Short and these kind of things. Or things like RBC was doing with another one of those Michael Lewis books, the Flash Boys example, right? Where we took we observed that there was a latency problem, when people were doing trades and algorithmic kind of traders were taking advantage of that hidden latency, and we just evened the playing field. So I think there'll be products around some of this stuff. Some of them will be experimental. Some of them will be, quick to die. And that's good, right? Because then we're innovative that way. And some of them will become mainstream pretty fast. I think, and some of them, when I talk about a product, it could be, what we used to call a collateral service might be built into the blockchain, right? And that's a new product that didn't exist before. Or a risk algorithm that could easily take a whole group that's sitting in a bank doing credit assessments on their counterparties now is a service that's built into a blockchain, and that's out there. There's a unending possibilities, right? Even financial guarantees, even settlements, some of which are services today that will disappear. Just like when we went from CD to tape to MP3 players to, Apple iTunes, it's going to happen in banking as well. There's absolutely no doubt about it. It's just a matter of how fast and which services and products that we're going to see out there.
Let me ask you about something else that I've been wondering about, and it does tie to financial services. So there's a lot of rewards programs that are related to financial services, but also involve other parties, like whether it's air miles or what have you. Is a blockchain a good environment for that type of thing? For having let's say a multi-party rewards program where several different merchandisers of different types of products and services can all participate in a rewards program? Is that
I think conceptually it's yes, absolutely.
Okay.
It's one of the ones that we're looking at first because it's a little bit lower risk than actual currency or
exactly.
But it's not to say we wouldn't have a service that converts points to actual real money.
Yeah.
So that's another one, but that's down the road, I think. But I think the concept of exchanging points or any sort of reward, I think, is very powerful, right? And it could be a consumer service, like when you're buying something at Best Buy or when you're doing a credit card transaction, that's done in real time and offers a reward for being a good customer, or even to incent you to buy something you might not have bought. And that's all going back to the data analytics piece, right? So collecting all the right data, of course, within the boundaries of regulations and making sure that client information is very secure or even invisible. But at some point, that you could opt in, participate in something like a pay for points is one of the ones that we had, and then convert that into value of some sort, and in a reward system or in a payout system, right?
Yeah.
And you could imagine that it's not just banking, but pretty much any scenario out there.
Yeah, the other one I was thinking of, I'd like to get your comments on this, is there's well, I'll give you the problem first.
Sure.
You tell me if blockchain could solve this. So, especially through the TPMA and the mentorship that I've been doing, connects me with a lot of the local B schools. I've got this situation where in a global economy where a lot of times there are new immigrants to Toronto from other countries like let's say India or what have you, these people are coming in. Maybe they've got a 4 or 6 year degree, whether it's in engineering or finance or something. And, one of the frustration points that they have, friction, if you will, is that their studies may or may not be recognized in Toronto, and that may impact their ability to get an equivalent job in Toronto that they would have had back home. So my question to you is this. What I hear you saying is a blockchain can be a good way of basically taking out a lot of the manual processes involved in basically managing, currency-like things, right? So could we envision a time whereby educational qualifications, if you will, because it's not that far of an extension in my mind conceptually from points. So let's say, accreditation points are in a blockchain, so that somebody in that scenario coming to, changing countries could more efficiently and effectively demonstrate their credentials and have their credentials valued internationally. Am I steering too far off the path, or is that a...
No, I think it's a use case that could be powerful, and I think it's one where there's a lot of manual process. It's
exactly.
The trouble, of course, is like some of the participants are in different systems, and in terms of educational standards, in terms of how we actually get education. And I'm not saying that it wouldn't be equivalent, but you still need some rules to be able to vet through that.
Instead of big shells and small shells, now we're talking about shells and rocks and bananas or whatever, right? So,
and it's very subjective.
So somebody has to come up with a relative valuation.
Yeah.
So those problems don't go away. You still have to have a way of establishing value.
Yes.
The blockchain just allows you to efficiently then transact with that. Okay. Yeah, and I went too far. The earlier example I had in my mind was even locally, a lot of people these days are taking education not just when they're out of high school, but throughout their lives. And it can get hard to track because they might move to Ottawa and go to Carleton, and they might move to Toronto and go to York. And then they've got these jumble of credits and like you say, all the paperwork and say, call Carleton and all that stuff. Okay.
Yeah, I mean,
okay, so
you
not
could,
too far off there.
No, I don't think so. I think you could, you could have a market where you value education from certain places and certain things that you've taken in, ongoing education and creating a value for that. I think there's algorithms you can create for that.
Yeah.
And I think we already do it. It's just that we do it, in different ways, inefficient ways. Like, some of the ways that we've hired people in the past, like, if they have an education from U of T in certain area, like computer science, let's say, and they have an MBA, then we value that one way. And then like you're right, someone comes from another country, you have no clue where they went to university, and you figure, that's equivalent. Maybe not. So there's a lot of guesswork there. Mm-hmm. So you could create a much more open and I guess transparent way to look at all these different institutions and take the bias out of it, because there's a bias, right? So I mean, like my boss is from Oxford, he's biased towards Oxford. I went to Queen's and Waterloo, so I'm biased towards those schools. But it doesn't mean I don't show value from other schools. So, but what is that value based on what? And there's a lot of bias. I mean, if you go to the States, the way they rank their education system versus others is probably biased pretty heavily, right?
For sure, yeah. So a technology is not going to solve that. No, that's a human thing. One more quick question, and then we're going to wrap up because I know we're running tight on time. So I'm assuming, like we're talking about banking and whatnot, because that's where we're a lot. But I'm assuming insurance is another industry that is, certainly we're here in Ontario, and we've been hearing for months and months and years how basically the Ontario citizen is very poorly served by the insurance business. I'm assuming what you're saying about banks is also happening in insurance, maybe at a less, maybe at a different pace. But is right? Is that fair to say that insurance is also?
I think insurance has
got a lot to gain from this, maybe a lot to lose as well.
Yeah, insurance is part of our world, right? So, I mean, I do see a lot of innovation going on there. There's quite a lot of change, and I think part of it is doing things more efficiently. Like they're very prone to the same problems with manual and lots of paperwork and so on. And but the policy, it could be a contract. I mean, there's an example or a use case where you could potentially have a blockchain kind of solution built around it.
Policy writers, all that stuff.
It's not too different from trading. There's a risk premium you pay in case something happens, and if it does happen, it triggers a payout and so on. There's all sorts of rules around it. So I could see that definitely being part of a blockchain kind of solution. I'm sure there's got to be startups thinking about that one. The insurance industry is also looking at things like the value chain around an accident. Like a claim gets paid out based on inefficient information. So now they're starting to build in real-time data that feeds from the car. You probably heard some of this stuff, like a kind of black box that tells how the driver was, performing. Exactly. But it also goes another step further, which is when it actually goes to the car repair shop. That's part of the same kind of equation, as opposed to someone gets the car and just kind of, tells someone that that's going to take $8,000 to repair when it really was only $500. These things will be, like those inefficiencies in the whole value chain will be part of the blockchain kind of solution. I believe that's true. And part of the policy and part of the settlement and part of the value equation for the whole industry. So that one's really ripe, I think. And that's a great area for startups, I think, I would say. And there's not just in blockchain, but there's a ton around, data for insurance that I think offers a lot of innovation right now.
Good. Well, listen, Duke, I'm going to respect your time, so let's leave it there. Maybe we can have another chat sometime and go a little deeper. So I always like to wrap up my interviews, Duke. I imagine a lot of the folks that are listening to this podcast are much earlier in their careers than you and I. So always wrap up the interview with the same question. If you were to go back 10 or 15 years and give some advice to the 10 or 15 year younger Duke Butler about their career, about business, about products, what advice would you give yourself?
I think that's a good question. If you went back that long, I was at Microsoft, which was I absolutely love working at Microsoft. It was a highly innovative company, and it's really obviously done quite well. But I mean, I also enjoyed the entrepreneurial part of things. So I think if I was to do it again, I would probably do a lot of the same things I did. I think there would be two paths. One is you choose the company you love, like a Microsoft, and you stay in it for the long run. And assuming it doesn't change too much, there's going to be tough times. Like Microsoft went through 10 years of it was doing okay, but not great. The stock kind of was flat. Now then they have a new CEO, Satya Nadella, and look, they're innovating like crazy. Yeah, it's going good. So you have to make up your mind: is that where I want to be for the long haul? I've got friends still there, and they're quite happy. They stayed there, and they moved up in the corporate world because it is a corporation. But I still think there's a powerful case for me to go back and say, should I have gone back to the entrepreneurial roots and done a startup? Blockchain wasn't one, obviously 10 years ago, but there was a lot of opportunities for payments and all sorts of software kind of things on the internet. So I mean, there's always that question, right? So I don't think there's a right or wrong answer. You can do both. I went in and out, but sometimes you just got to stick with one or the other. I think that's the only thing I would do a little different, maybe, is possibly go back onto the entrepreneurial side of things. Yeah. And like you say, maybe not be afraid to go back and forth. That's good, because I used to have a CEO when I was at Chameleon Solutions. We had all over the office. He had posters up on the wall that said the power of and, because I think we're conditioned to think either or, A or B, and kind of what I hear you saying is, don't be afraid to think that you can have it both, right? Obviously, you don't do both at the same time, but do 5 years corporate, 5 years entrepreneur. If you get wiped out, come back to corporate, lick your wounds, rebuild your base. That's right. Is that kind of what I'm hearing you? That's right. And I think another thing is too, the big companies are changing too, right? The banks have innovation centers, like we're creating 4 for RBC. Things around payments, blockchain, these kind of things are actually, as we speak, they're doing all sorts of pilots and POCs. So they're becoming more conscious that you need to integrate with the startup community, that you need to onboard new ideas from the startup community, that you need to take a position and even buy startup companies sometimes. They also want to be innovative, and they can't always do that without going to other people outside of the bank. And Silicon Valley is an area, Waterloo is an area, New York's an area for fintech. These are, and even Europe. I think we got to be more innovative and ready to change. And I think there's a lot of legacy stuff we've got to figure out. But or legacy, as we were calling systems of record. I mean, that kind of concept where we can't just change it overnight. But at the same time, cloud is enabling starting new applications from scratch that we couldn't do before. So you gotta be more entrepreneurial, whether you're out on your own or in a big company like RBC or Microsoft. You gotta think entrepreneurially. That's the way it's become. I don't think there's that start young and stay there for 40 years and hope everything works out kind of thing, because I think that's kind of gone. It could happen, but it's unlikely now. I love those old stories, and there's thousands of them. But for example, when everybody was communicating with the tap machines, right? The Morse code or whatever, and the early days of the phone came along, and those guys very seriously that were doing the tap very seriously thought, oh, that phone is a gimmick. Nobody's going to want to use that, right? Because this is so efficient, blah, blah, blah. And, look what happens, right? And we see so many examples of that. That if you think, no, I'm the incumbent here, nobody can touch me, we've always done it this way. Next thing you know, you're out of business, right? Yes. So I think you'll stay nimble. And the pace of change is we've talked about it for decades, right? But I think it's true now. I think the pace of change is incredibly fast now, and you could feel it even in kind of very reliable, kind of so-called secure industries that you'd expect, like banking, to be pretty predictable. But you saw what happened 7 years ago, and I think that opened up their eyes. And then the fact is that the whole world's changing when it comes to banking and fintech. So. Yeah, good. So, Duke, if somebody's listening to this and they want to reach out, ask you a question, get some clarity on something you said, any contact information that you're comfortable sharing with the listeners? Sure. So I can give you my RBC email. It's duke.butler@rbc.com. That's probably the easiest way to get me. So, and I'll spell that out. That's duke.butler
RBC.com. That's already spelling itself.
Yeah.
Good. Well, on behalf of Ready Product Radio, Duke, and our listeners, I'd like to thank you for an excellent chat. Hopefully we can do this again sometime.
Yeah. Well, it's been a pleasure. Thanks, Alan.
Okay.
Enjoyed it.
Thanks, Duke.
Have a good one.
Today's podcast was brought to you by Under 10 Consulting. Get your products teams up to speed quickly with the latest methods and a proven process tailored to your organization. Thank you for listening to this episode of Ready Product Radio, part of the Ready PDM network. This is when most podcasters ask you to leave a review on iTunes if you like the show. My only request is if you found the show entertaining, inspiring, or informative, please share it with a colleague or friend who may feel the same way. Also, note that the views expressed in this episode do not necessarily reflect my views or the views of the Ready PDM network. If you want yourself or your product to be ready, then keep your eyes on your markets, your ears to your customers, your mind on their experiences, both good and bad, and finally keep your hearts in your products. Until next time, thank you for listening. You can contact us on Twitter at Ready Product Radio. That's RDYPRODUCTRADIO. And on the web at www.readyproductradio.com.
Gee, Ray, what do you want to do tonight?
The same thing we do every night, Pinky. Try to take over the world.
You're still here? It's over. Go home. Go.